Okay, mostly people are interested in the swing trading because they cannot sit in front of charts for the whole day and trade. So they need some models that can work in a higher time frames, and they can buy or sell based on those time frames and hold it for the weeks or many days. So in this video we will talk about the swing trading model that you can use. First of all, there is a same model that repeats in almost all time frames, and if you want to trade in a swing trading you can use the higher time frames. Now what is the model? When market is moving to the upside, something like this, and tap on its unmitigated higher time frame PY, something like this, then you have to look it into the lower time frames. Now what you can see in the lower time frames, when market move to the upside and break below the first pullback, then this point is your change of character, and now you have to wait for the market to take out the inducement at this point. Now this is the inducement, and when market tap on this unmitigated order block in the lower time frames after taking out the inducement, you can look for the sell. You can sell at this point and put the stop loss just above this point and target the recent low. Now this is the first scenario. The second scenario is that if market at this point didn't close the candle above the previous high but accept the liquidity, at that point you do not need to wait for the inducement. You can also sell directly at this point because then liquidity is already taken, so there is no need for the inducement. In this way you can take the entries when trading based on the swing trading models. Now we will move to the charts and also see you examples. Show you. Now you can trade the swing trading based on the 4-hour time frame or a daily time frame. And in this video we will take the example of the 4-hour time frame. And you can start from any top or bottom of the market. Now at this point, as you can see that market was bearish and market has taken out the recent high at this point. This was the first high, and when market tap on the first high and also tap on this unmitigated order block, you can look for a sell and market move to the downside. And this was the break of structure. And in the same way, market continue to move to the upside and create a change of character at this point. And after the change of character, you can wait and see that this point is the higher time frame inducement or a liquidity. And after the liquidity, this was your unmitigated order block which market has respected. And when market tap on this point, you can look for the lower time frame entries and buy for the longer time. And this is your break of structure to the upside. Now after this, where you can buy, this was again the liquidity point for the 4-hour time frame, and when market break below this point you can look for a buy. At this point market hasn't tapped on any of the POI, but you have to look into consideration the lower time frame models that you can use at this point for the buying. Like at this point you can buy. Now again market move to the upside, and this is the break of structure, and after the break of structure you again and again market move to the upside. So when we can buy again, when market break below the first lows. So where is the first low? If you think this is the first low or this is the first low, then you all are wrong, because this is not the first low in this price lag. So where is the first low? This was the first low at this point. If market not break below this point, we are not willing to buy at this point, but market again move to the upside, so there is a no trade for us to buy at this point. And again market continue to move to the downside, but at this point market has broken below the first low at this point, so you can buy. So when you can buy at this order block, you can look for a buy if you take the lower time frame confirmation, or at this point you can look for the buy. But market has failed both of these order blocks, so you have to look for the higher time frame order blocks if you want to buy at this point. Now as you can see that there can be the order block at this point in the higher time frames where market has tapped, and if we refine that higher time frame order block, this is the unmitigated shadow where you can buy, and market tap on this point and move to the upside, and this is your target at this point. Now after that, this break of structure, as you can see that market hasn't sustained above this point and also break below this point. Now you can see that at this point market has shifted to the downside because market hasn't created the sustainable change break of structure at this point. So if you want to sell at this point In the swing trading, this is the first high which you wait for the market to take out, and after that market move to the downside, and this is your break of structure to the downside. And again, market at this point take out the first high at this point and tap on this unmitigated order block at this point, and also taken out the liquidity of this order block, and you can sell at this point, and this is the break of structure. And after the break of structure, you again wait for the market to take out the first highs, which was at this point, and after that market tapped hasn't tapped on any of the order block but swept the liquidity of the previous high. Even though this is not the real pullback, but you can see that this is the high which is liquidity was taken by the market, and market moved to the downside. And at this point there can be two scenarios. Market can either create a new lower low or respect this unmitigated order block, and if market respect this unmitigated order block, you can look for a buy on a higher time frame for the longer term, and this is the break of structure to the upside. Even though this is the internal break of structure, and market continue to move to the upside. Now this was the first low. When market break below this point, you can look for a buy at this point. But again, market didn't successfully closed above this point, so you can see that market can move to the downside from this point. And if market break above the first high and tap on this any of the unmitigated order block, you can look for the sell at this point. Now how you can take entries? If you can see that if you use the 4-hour time frame as your higher time frame, then you need at least 15-minute time frame for the entries, and we can see only 2 or 3 entries at this point. Now this was a PY. Market tap on this point, so the first low broken is your change of character. This is the change of character, and after the change of character, you need the first pullback to be broken to the upside. At this point, this was the first pullback. Market take out the liquidity of this point and close below this point. And when market close below this point, you can take entry based on the single candle order block at this point. And we will make videos about the single candle order block on this channel. And you can target the reset low, which was at this point. And this was your trade, swing trade. Now, again, market was moving to the downside. And at this point, market sweep the liquidity. So what you need the market to break below the first pullback, which is at this point, and this becomes your change of character. And after the change of character, you wait for the market to break above the first highs, because liquidity should be grabbed before moving to the downside. Market grab the liquidity, and now there are two scenarios. This is the first unmitigated PY. Market tap on it and move to the downside, and this is the another PY, which is the unmitigated wick. Market also tap on this point and move to the downside. Now you can plan your entries based on any PY and put the stop loss just above this point and target the major low. But you must also take partials as market move to the downside, because there is a no 100% guarantee that market can hit your TP. And this was your trade that you could have taken. Now again, market tap on this unmitigated order block, and what you need now? You need market to break above the first pullback, which is at this point. So this point becomes a change of character. Now after the change of character, as you can see that market moved to the downside and taken out the liquidity in the 15-minute and tap on this unmitigated order block. And when market tap on this unmitigated order block, you can look for a buy at this point, for the stop loss at this point. This is the risky stop loss, and target the reset high, which was at this point. And as you can see that these were the trades that you can take in the swing trading. And again at this point, this was the 4-hour PY, and market tap on this point. This was the first high broken, so this is the change of character in the lower time frames. And after the change of character, we wait for the market to break below the first pullback, which is at this point. And where is the unmitigated order block or order flow? And this was the unmitigated order block. If market tap on this point, give any confirmation, you can look for a buy, and at this point you can buy and put the stop loss just below this point. But at this time, US stop loss gets hit. But in the same time, market moved to the downside and again swept the liquidity of the previous low and also closed above the previous high. So we do not need the inducement at this point because liquidity has already taken. So this is the unmitigated PY. When market tap on this point, you can look for a buy. So this is your buying. This is the stop loss. This is the risky stop loss, and you can target the recent high, which was at this point. So this is your trade that you could have taken. And at this point again, market hasn't sustainably closed above this point. So you can also plan the sell entry at this point. This was a first low broken. So this is the change of character. And after the change of character, market hasn't taken the first pullback until this point. At this point, market has taken the first pullback, and this is the unmitigated area for you to sell. Market tap on this point, and this is the trade that you could have taken. This is a stop loss, and you can target the recent low, which was at this point. In this way, you could have taken the entries. If you have learned something new from this video, please make sure to like and subscribe this channel for more such content.